Thank you for tuning into Simplified and welcome to Lesson 2 on accounting for issue of shares. Lesson 2 is going to be on issue of shares at a discount. A recap of some important terms that we may be using in this tutorial. Par or nominal or face value, we said this is the value of each individual share as shown on the share certificate. Point to note, shares are always recorded at par in the company records. Share premium, this is where a share is issued at a price higher than the nominal value. For example, a share for $1 issued at $1.60. Share discount, this is where a share is sold at a price lower than the nominal value. For example, a share for $1 issued at 90 cents. Share discount accounting. Application and allotment account. Credit application and allotment account with all the application and allotment monies received, and debit bank account. Debit application and allotment account and credit bank account with any refunds at application. Debit application and allotment account and credit share capital account with the value of shares required at application and allotment. Credit application and allotment account and debit share discount account with the value of discount. Point to note. Allotment monies received will be less the advance received at application if and only if there has been an oversubscription and not all the excess monies were retained by the organization. Generally, share discount is recorded at allotment stage if payment is being done in installments. Illustration. AB Limited issued 20,000 shares of $2 each at $1.80. Payable $1 on application, 30 cents on allotment including discount, and 50 cents on first and final call. 27,500 applications were received, 2,500 applications were rejected, and the remainder were allotted on a 4 for every 5 applied for. Assume all conditions were satisfied. Show the following ledger accounts as they would appear in AB Limited accounts. Application and allotment account, first and final call account, ordinary share capital account, share discount account, bank and balance sheet extract. I would encourage you to pause this video at this juncture and try to solve this illustration using the information provided on this page and the information learned in the previous lesson on issue of shares at par and at a premium. So for the solution, like we did before in the previous lessons, I have juxtaposed our question together with the necessary accounting entries that we need to solve this illustration so that we will be able to tell where our solution figures are coming from. So before we show the solution, we might need to take a deeper look at our question so that we get to understand it better before we start looking at the solution. Like we said before, shares are always recorded in the company records at par. So what we should know is our ordinary share capital account in this case is going to be 20,000 shares multiplied by $2 each to give us $40,000 ordinary share balance. We are also told that these shares were sold at $1.80, so we can see that there is a discount of 20 cents. We are also told that $1 was paid on application, 30 cents was paid on allotment, including the discount. So what this means is the discount, which is 20 cents, was factored in on allotment. We are also told that 50 cents was received on first and final call. We are told 27,500 applications were received. That means there was an oversubscription of 7,500. Of the 7,500, 2,500 applications were rejected. That means we remained with the 25,000 applications. The remainder was allotted on a 4 for every 5 applied for. Like we said in the previous lesson, if we say 4 divided by 5, multiply by the remaining applications, 25,000, we will get the 20,000 shares that were issued. It shows that of the 25,000, if we less 20,000, we get 5,000. So we had an excess on applications of 5,000. We need to take note of that 5,000 when we are calculating allotment monies. So having said that, we can now go into our solution to answer this question. So there we are, application and allotment account. Let's go to our accounting entry notes to see how we are supposed to record these entries. First, we are told to credit application and allotment account with all the application and allotment monies received. So we go to the application and allotment account. On the credit side, like we said before, we always split the monies received for application and allotment to enable us to take care of the excess received on application. So on application, we received 27,500 applications multiplied by $1, which is what was paid on application, $1 here. So if we multiply that, we get 27,500. We do the same for the allotment monies. We are told that there were 20,000 shares which were issued. 20,000 is what was allotted. So we say 20,000 multiplied by 30 cents, which was received on allotment. We take care of the excess that was received on application. 5,000 multiplied by $1. If we say 20,000 times 30 cents less 5,000 times $1, we get $1,000. Double entry, we go to the bank account where we record application and allotment columns. On application, 27,500 times $1 to give us 27,500. On allotment, 20,000 times 30 cents less excess monies on application, which is 5,000, to give us $1,000. Next, accounting note. We debit application and allotment account with any refunds at application, and we credit bank account. So we go to the application and allotment account. We debit it with any refunds. We are told in our question that 2,500 applications. We go to the next accounting note, which says debit application and allotment account with any refunds at application and credit bank account. So in our question, we are told 2,500 applications were rejected. So we record on the debit side of the application and allotment account, refunds 2,500 multiplied by $1. $1 is because applications on application, $1 is what was paid. So we get 2,500. Double entry, we go to the bank account. On the credit side, refund $2,500. Next, we are told debit application and allotment account with value of shares required at application and allotment, and credit share capital account. So we go to our question. We are told $1 is paid on application, 30 cents is paid on allotment, including the discount. Remember, we said shares are always recorded at par. And we are told that there was a discount. We know that our discount is 20 cents, being $2 minus $1.80. So our subscribers to the shares were told to pay 30 cents instead of 50 cents, yet there been no discount. So because our shares are always recorded at par, we will have to factor in the discount on this stage, which is 20 cents. So we say 20 cents plus 30 cents to get 50 cents. So we will say $1 on application plus 50 cents, which was supposed to be received if our shares were not issued at a discount, to get $1.50. So in our application and allotment account, we will record ordinary share capital on the debit side of application and allotment account, 20,000 multiplied by $1.50 to give us 30,000. Double entry, we go to our ordinary share capital account. On the credit side, narration, application, and allotment, we get 30,000. Next accounting entry, we are told to credit application and allotment account and debit share discount account with value of discount. So we go to our application and allotment account. On the credit side, narration, share discount account, we are told in our question that 20,000 shares were issued. And we know that our discount is $2 less $1.80, which is 20 cents, which is 20,000 multiplied by 20 cents to give us $4,000. Double entry with debit share discount account, narration, application, and allotment, $4,000. Next, we need to record the first and final core account. We already know what we need to do with the first and final core account. First, we need to credit the first and final core account with the monies received on. So we are told that 50 cents was paid on first and final core. So 20,000 multiplied by 50 cents will give us $10,000. Double entry, we go to the bank account. First and final core, 50 cents times 20,000 to give us 10,000. Next, with the first and final core account, we need to record the ordinary share capital. Remember, we said share capital is always recorded at par. So we'll simply say 50 cents times 20,000 to give us 10,000. Double entry, we go to the ordinary share capital account. First and final core, we have our 10,000. So like we said before, application and allotment accounts, first and final core accounts, they will always balance off. We go to the bank account, we add the debit side, 27,500 plus 1,000 plus 10,000 will give us 38,500. On the credit side, we already have 2,500 for refund, so the balance will be 36,000, which is brought down. On the ordinary share capital account, we can confirm that our ordinary share capital balance is correct for 40,000. Remember, we said shares are always recorded at par, so 20,000 times 2 will give us 40,000. Therefore, our ordinary share capital account is confirmed correct. Share discount account, we have 4,000, which is the balance brought down. Lastly, we need to do the balance sheet extract. For the statement of financial position extract, we can see that on the debit side, we have current assets and we have bank balance brought down of 36,000, which is shown on the debit side of our statement of financial position extract as shown here. On the credit side, we have equity section where we have ordinary share capital of 40,000 and share discount of negative 4,000. Share discount, you will notice that in our ledger accounts, it has a debit balance of 4,000, but in the statement of financial position, we have recorded it on the equity side, representing a capital loss. Basically, share discount is a capital loss. Therefore, we have to record it on the capital side as a negative to show the true reflection of our equity value. In some instances, when the share discount is of an insignificant value, some institutions might choose to write it off against the profit and loss account. Some may choose to write it off against a share premium account. Therefore, it has to be shown on the equity side of the statement of financial position. Solution on a wider screen so that you will be able to see how we were able to come up with the solution. So there you go with the solution on issue of shares at a discount. So this is where our lesson ends. Next, we are going to be touching on accounting for shares forfeiture. Please subscribe to my channel to receive the next lessons as and when they are uploaded. If you like what you have been seeing, please click the like icon and share with your classmates and stud buddies. Otherwise, cheers and Goodbye.